HODL isn't just a meme, it's a mindset. And depending on how you use it, that mindset can either build your wealth or destroy it. Because while HODLing was born from a typo during a Bitcoin crash, it's evolved into a philosophy that defines the crypto world. But here's the real question. Is it helping you become a smarter investor or just giving you an excuse to ignore red flags? Are you a hodler or a trader? Drop your style in the comments below. I want to hear how you navigate the madness of this market. HODL. It started as a typo, but turned into one of crypto's most iconic rallying cries. Way back in 2013, a Bitcoin Talk user named GameQB posted in a drunken rant during a price crash. The subject line read, "I am HODLing," and somehow it stuck. What began as a typo quickly became a philosophy. It meant holding onto your coins through the chaos, ignoring the noise, the dips, the drama, and believing in the long-term value of crypto. Now, for many, especially Bitcoiners, HODLing isn't just about patience, it's about conviction. It's a stand against emotional trading, government control, and short-term thinking. And over time, it's proven powerful. According to Glassnode, 65% of all Bitcoin hasn't moved in over a year. That's tens of millions of coins held through bear markets, crashes, and FUD storms. But here's where things get tricky. HODLing can protect you from panic, yes, but it can also blind you to danger, especially when applied to altcoins, hype cycles, or projects without any fundamentals. So in this video, we're going to break down the psychology behind HODLing, where it helps, where it hurts, and how to do it right. So why do people HODL? Psychologically, it often comes down to something called confirmation bias. That's a tendency to seek out information that supports what we already believe and ignore anything that challenges it. Now in crypto, this shows up when someone believes deeply in a coin's future, so they tune out negative news, red flags, or shifting fundamentals. They keep holding, convinced it'll bounce back because to sell would mean admitting that they were wrong. Now this mindset can be powerful when applied to something like Bitcoin, which is backed by years of security, decentralization, and consistent development. But when people apply the same mindset to speculative altcoins, it gets risky. Take the 2017 ICO boom, for example. Thousands of new coins launched with big promises. By 2019, over 80% of them had lost more than 90% of their value. Yet, many investors kept HODLing, convinced that they had found the next Bitcoin. A study by Cambridge University in 2023 found that 55% of crypto investors show strong signs of confirmation bias, holding on to assets even when the data says it's time to reconsider. It's like staying on a sinking ship just because you really like the captain. Now, HODLing isn't about blind loyalty. It should be about trust earned through fundamentals. If you're holding because you've done your research and believe in the long-term mission, then that's great. But if you're just hoping something will moon again because it did once before, that's not strategy. That is wishful thinking. Now, HODLing isn't just a personal decision. It actually shapes the entire crypto market. When a large portion of investors refuse to sell, it reduces the available supply on exchanges. That creates price stability, especially during downturns. Now, we've seen this with Bitcoin in recent years. As of 2025, Glassnode reports that about 70% of Bitcoin supply is held by long-term holders. These are people who haven't moved their coins in over a year. This illiquid supply helps buffer against market crashes because fewer coins are available to panic sell when prices dip. But here's the flip side. When HODLing is applied to low-quality altcoins, it can distort market signals. Projects with no development, weak fundamentals, or outright scams continue to float along with inflated market caps, not because they're healthy, but because enough people are still holding. Now, this delays price corrections that might otherwise clear out bad projects. It also misleads new investors who see these coins still surviving and assume they're legitimate. The 2018 bear market showed this clearly. While Bitcoin fell to $3,000, it eventually recovered. Many altcoins never did. In fact, according to CoinOpsy's 2024 update, over 60% of ICO tokens from 2017 are now considered dead. That means no development, no trading activity, and no community. Yet thousands of people keep holding them for years, waiting for a comeback that will never happen. So yes, holding can stabilize the market and reward long-term conviction. But without critical thinking, it can also create a kind of zombie economy where dead projects linger on just because no one wants to admit defeat. HODLing wasn't just the meme that caught on. It's actually aligned with the spirit of why Bitcoin was created. Satoshi Nakamoto didn't build Bitcoin so people could day trade it like stocks. He designed it as a peer-to-peer financial system, one that could store value long-term without needing trust in banks or governments. In fact, the 21 million coin cap was intentionally set to create digital scarcity. This built-in limit means that over time, Bitcoin should naturally become more valuable if people hold it and use it as intended. So, HODLing Bitcoin supports the protocol's long-term goals by reducing selling pressure and reinforcing its role as a store of value. It also strengthens decentralization. When you hold your coins in self-custody, especially off exchanges, you're keeping them out of centralized control. You reduce the risk of custodial failures and censorship, and you help protect the network from being dominated by institutions. But here's where HODLing can stray off course. When people blindly apply this mindset to altcoins, especially centralized or pre-mined tokens, they're not always supporting decentralization or sound money. Many of those coins don't have fixed supplies. They rely on teams or companies to maintain the network, and when those teams vanish or fail, the tokens lose their value. A 2024 Coinmetrics report showed that 45% of altcoin trading volume still takes place on centralized exchanges. That's a red flag, because if you're holding a token that depends on centralized platforms for survival, you're not really participating in crypto's trustless ethos. You're still relying on middlemen. And Satoshi once wrote, "Bitcoin is a tool for freeing humanity from central banks." Holding Bitcoin supports that mission, but holding random tokens without doing your homework, that might take you further away from it. HODLing isn't a bad strategy, but it needs to be done with intention, not just blind faith. First, always start with research. Before you commit to holding a coin long-term, read the white paper. Ask who's behind the project. Is it truly decentralized? Does it solve a real problem, or is it just hype? Don't fall into the trap of tribalism. Just because a community is loud or loyal doesn't mean the project is solid. If you can't explain what the coin does or how it makes money, you probably shouldn't be holding it. Second, diversify. Even if you love Bitcoin, it's smart not to go all in on one asset. And if you're exploring altcoins, spread your risk. A single token collapse won't wreck your entire portfolio if you're diversified. Third, and this is crucial, self-custody. HODLing on an exchange isn't really HODLing. It's trusting someone else with your keys, your coins, your future. A 2022 Kraken intelligence report found that 30% of long-term holders who kept funds on exchanges eventually lost them due to hacks, lockouts, or sudden platform shutdowns. The best way to hold crypto long-term is with a hardware wallet like Trezor, Ledger, Bitbox, for example. Move your assets off exchanges and into your own hands. That's how you hold like a pro. Also, stay engaged. Pay attention to project updates, network security, changes in tokenomics. Just because you're holding doesn't mean you stop learning. And finally, have a plan. What are you HODLing for? Retirement? A specific price target? A goal gives your strategy purpose and makes it easier to ignore the noise during dips or pumps. So, are you holding with purpose or just riding the waves, hoping for the best? The HODL mindset has changed crypto forever. It gave everyday investors the courage to hold through chaos, to believe in something bigger than the price chart. But without strategy, it can also lead to poor decisions, blind loyalty, and missed opportunities. If you're serious about leveling up your crypto journey, learning how to hodl smart, avoid common mistakes, and build real financial sovereignty, check out learningcrypto.com. It's packed with no-nonsense education to help you make better decisions, whether you're just getting started or refining your strategy. And let's hear from you. Which coin are you holding and why? If you care to share, drop it in the comments and let's talk about your long-term vision. If you found this helpful, hit that subscribe button and share it with someone who needs to hear it. Because in crypto, patience is power, but only when it's informed. Thanks so much for watching. I'll see you in the next video.